So guys, welcome back to my channel. My name is Femi, and this is going to be the second part of the video I made for market structure. So in this video I'll be showing you how you can apply everything we've learned about market structure right on the chart. So I'll be showing you how you can mark out all the market structures right on the chart. But before that, let's quickly make a recap of everything I mentioned in the previous video. So sorry, let me just right. So yeah, in the last video we talked about market structure, which simply means the direction of the price in the market, the price movement, direction of price movement. That's all. So we have three directions. We have the uptrend, we have the downtrend, and we have the ranging market. The uptrend is when the market is giving us a new high, an higher high. When the market is giving us an higher high, that's when we start to have an uptrend market. But in a situation where you see a low and you see a lower low, the market is creating a lower low. That's where you see that's what we call the downtrend market. While the ranging market is when the market is moving sideways. It's not giving us a new high, neither is it giving us a new low. Rather, it's ranging between the high and low it has created. So beside this, we also talked about movement in the market. So when you see movement in the market, we have two components. That's the impulsive move and the corrective move. So the impulsive move is the major, or let me say dominant move in the market that determines the direction of the market. While the pullback or the corrective, we also call it pullback, is just the pullback of the impulsive move. The effect of this impulsive move always results to a little correction, or you call it pullback, before the market gives another impulsive move. So these are the two components of movement. So we also talk about levels, the key levels of market structure. We only have three, but we are familiar with two. So I just mentioned the third one so that you know it, to get better. So the first one is the support level. This is the level that marks the swing low of the market. This is the support level here, and you can see the market after this impulsive move. After this impulsive move, the market made a correction and gave us a swing low. It was from this swing low that the market start another impulsive move. So this swing low is called the support level. That's the level where we believe some traders would like to long the market, would like to place a buy order on the market, in the market. So it is always the swing low. It marks the swing low of the market. Then we have the resistance level. The resistance level is the level at the top of the market that rejects the market. Yes, it rejects the market. So this is the zone that pushes the price down. As you can see, it's always drawn at the swing high of the chart. This is the swing high of the chart, so it pushes the price downward. And the third level is the psychology level. I told you this level is not so common among traders, but it's very, very important, and it's also a key level where some traders wait. They are attracted to in order to take action, in order to either place a stop loss or take profit or enter a trade. So it's the level that usually end in zero. Look at, if you can check your chart on TradingView, it's usually rounded up to the nearest nearest whole number. So as you can see, so it's, and I think I showed you how you can make it appear on your chart if you are using TradingView by going to the settings, then go to chart. So you see the horizontal line, just give it color and it will be there. So these are the key levels of market structure. So I think we also talked about, lastly we talked about the two key aspects of market structures, the two key technical aspects of market structure. We have the break of structure and we have the change of character. What is break of structure? Break of structure is in an uptrend when the market is giving you a new high. the market is being pushed from this support level, from this swing low. The market is being pushed, and it was pushed such that it broke above this previous high. At this point, the market is said to have experienced a break of structure, because there's a structure here which is a resistance, but the market has pushed and has broken the resistance here. So the market, at this point, we said there's a break of structure here. So it is an important um, um, structure you should always look out for in the market, because it shows continuity in the direction of the market. If the market is moving upward and you are seeing a break of structure, it shows that you should be looking for another buy opportunity in the market, because the market shows that it still want to go, up or in the dominant direction. While you can see the downtrend scenario, you can see that when the market pushes down, it corrects itself, or let me say pull back a little bit, and then from the swing high, which is also the resistance, the market can push downward such that it will break below the previous low. At this point, we said to have had a break of structure. At this point, we said to have had a break of structure. There's another break of structure at this point. Okay, so that is break of structure on the two scenarios, the uptrend and the downtrend scenario. So now let's talk about change of character. I said change of character is when the market discontinue from its dominant direction. It gives us a sign that it's about to change the direction of movement. So you can see the market here is an uptrend. It has given us a high and given us a higher high. So we expected that after this new higher high, we expected that market should give us a higher low and then give us, another a new high in order to continue in the uptrend direction. But instead, from this resistance, don't forget the swing high is always a resistance. From this resistance, the market pushed down and pushed down below the previous high. It pushed down below the previous high, which contradicts the direction or the principle of uptrend. Here, instead of having higher high, we now have a lower high. So here the market, at this point where the market breaks below the previous higher high to give us a lower high, the market is said to have changed its character. So here we have a change of character. So when you spot this in the market, what does it mean? It means the market is about to reverse its direction. So you have to be careful of looking for a buy opportunity. You have to be careful because the market is now about to change its direction. So these are the two, and this is the uptrend scenario, this is the downtrend scenario. So this is the recap of what we had in the previous video. So let's see how we can spot all these levels and implement them on the charts. So this is BTC, this is Bitcoin chart, and this is a weekly time frame. However, just know that you can apply all of this on all the time frame, like all the time frame in the market. So uh, so let's just see. But because this is a weekly time frame, you don't really have much to draw. All we need to spot on the higher time frame. Okay, let's take it one after the other. We talked about the support and resistance. We said the support marks the swing low, while the resistance marks the swing high. How do you spot the swing low and swing high? From this point where we have our the beginning of our data, you can see from this point to this point, this is a swing high, this is a swing low, this is another swing high, because in between you can see small high and small lows. But all these small highs and small lows, they are also relevant, but on the lower time frame, not on this higher time frame. So right now that we are analyzing on higher time frame, we can just mark out the swing high and swing low on this. So let me, okay, so the my drawing tools, so I can just use it easily here. Okay, so let's mark the swing highs and swing lows in this market. So as you can see, from this point to this point, this is high, this is a low, this is another high, This is low, another low. This is another high. This is another low, and this is another high. So on weekly time frame, this is exactly the market structure I can spot. Like I said earlier, when you talk of swing high and swing low, you don't consider all these small structures. I'm not saying they are not important, they are very important, but not on this same higher time frame. So as we have marked this, I believe you remember we said from the movement we have two components. We have the impulsive move, we have the correction. Impulsive move, instead of this acting as a correction, it has broken the previous low to give us a lower low. So there's a change of character here. So before we have another impulsive move again, and this is a correction for this impulsive move, and then another impulsive move. So I believe you have been able to identify the impulsive move, correction, impulsive move, correction, and another impulsive move right on the chart. This is for a weekly time frame. So now let's mark the support and resistance. Don't forget what I said about the support and resistance. Support is drawn as the swing low, while resistance is drawn as the swing high. So so because okay, we'll get there. At first, this is a support here, because from this region the market stopped going up and rejected back. So there's a support here, so which I'm going to draw. So there's a support there, weekly support. So there's a support on this zone. So from that support you can see that the market rejected, and here we have a what? We have a no, sorry, this is a resistance. Sorry, pardon me. This is a resistance because that is where the market is being rejected from. So that's a swing high, while the swing low is the support. So this is a support here, you have a support here, as you can see. So I hope you are getting how I'm marking this structure. So however, the market has broken this support here in order to give us another support again, which is another swing low. So this is another swing low. So from this swing low the market moved up and then come down. So this up, which is another swing high, is another structure for us. And what structure is that? That is a resistance, because at this point the market stopped going and the market is being rejected. When it's rejected, don't forget this is a corrective move. When it's rejected, where did it stop rejecting? It stopped rejecting at this level. So this is what? This is another what? Support level. So this is a support level, this is a resistance level. However, the market, after the market resisted and pushed down from this resistance down to this support level, what happened? The market start another movement from this level, which is an impulsive move, and the level broke out of this structure and went to create a new high. So this is a new high for us on the weekly time frame. So on the weekly time frame, so we have a new high at this spot. So because of, as a trader, though the past data is relevant, however, because of the way I have analyzed, I'll be more attracted to what has happened recently rather than putting all of this on my chart. So I might actually remove it and I might decide to leave it. However, like I said earlier, as a technical trader, I would rather focus on this recent structure. So we've been able to plot our support and resistance. Like I said, this is a resistance here, this is a support, this is a support here. We always have our support at the swing low, while the resistance is at the swing high. So this is a resistance. However, at this point, as you can see, this is another swing high, which is a resistance. So from this point the market is rejecting. So I've not been able to decide the swing low yet because the market is still within this range on the weekly time frame. So now we've been able to see how we can plot support and resistance on higher time frame. So if you come to a lower time frame, let's go to the daily time frame. So on the daily time frame, you can see that the support is being like tested here. After being rejected here, it's been tested here, and you can even see more clearly other levels on the lower time frame. So this is what this is the level we actually spotted on the weekly time frame. As you can see on daily, you can see that the market, moved in between and created a lot of structures in between. So what are the structures the market created in between on daily time frame? As you can see, we have, okay, let me just draw it out. So from this, we have a swing high, swing low, another swing high, we have a lower low, another swing high, lower high, we have a lower low, we have a lower high, and at this point, instead of giving us a lower low, it's giving us an equal low. So from this equal low, we now have a what? Another, a higher high. I'm going to spot out one of the other things we mentioned in the past video. So the market went up, give us another low before going up. So as you can see, so within the daily time frame, you can see what the market gave us: a swing low, swing high, swing low, swing high, swing low, swing high. So what can you deduce from this structure here? So I believe you can all see it. As you can see, yeah, that's it. So that is the movement, the swing high, swing low, swing high, swing low, on daily time frame. So let me show you what other what other aspect of market structure do we have in this on this chart. So can you spot a break of structure here? Yes, I can. Where do we have a break of structure? Don't forget from our previous sorry, let me just, from this point, like I said, I just try to mark the swing high and swing low with this marker. So from this point, you can see that the market has been giving us a break of structure at this level. You can see we have a previous low, and from this low, here, the market came down and broke below this low to give us a lower low. So there's a break of structure here, which shows that the market still intend to go downward, and that's why you can see that after the market went up, it gave us a lower high. And mind you, because of this high, lower high, lower high, lower high, what type of trend do we have here? What type of trend do we have here? Sorry, I'm trying to. So from this structure, what do you think we have here? This is a downtrend. As you can see, this is a downtrend because we have a low here, we have high here, we have a low here, we have lower high, we have lower low. There's a break of structure. We have lower high, and here again we have another what? Lower low. Once you are able to spot this conveniently on your chart, that's all. You'll be good. So this is another break of structure here. So after this break of structure, as usual, we expected the market to give us a lower high because it is a downtrend. So from this lower high, we expected a lower low, that is another break of structure. But instead of having a lower low here, the market stopped at this previous low in order to give us what? A new high that is higher than the lower high. You now have higher high. So at this point where the market refused to go downward and now give us a high that is higher than the previous high. Don't forget, what do we have there? That's a change of character. That's a change of character there. So you mark it. So that's a change of character there. So I hope you are getting it. A break of structure is when the market continues to move in a pattern of in a movement pattern, either downtrend or uptrend, by giving you a lower low, creating another lower low in a downtrend, but in an uptrend it will be giving you higher high. But when the market decide to violate the movement and give you, a sign that it is about to change its direction, that's where you have change of character. So you have a change of character here. So at this point, even though the market is, this is a corrective move, or you call it pullback. At this point, I won't assume that the market is going downward because of this change of character. I will wait for the market to, to complete this corrective pattern. And at this end, what do we have here? We have what? We have a support. We have a support. So that's a daily support, not weekly support. That is a daily support. So on this daily support, the market moved. After the market moved, it broke this previous high to give us what? A new high, which is higher high. And at this point, the market is said to have what? To have broken structure. So I'm trying to show you how you can have all of this interchangeably on the market. You must just be able to spot it. Very soon you will see how you can trade and, analyze your market. That's okay. Break of structure. So you can see that the market is no longer a downtrend. It's now what? Trending up. So from this point, this is where the market changed. From this point where the market broke the structure. So the market has now started an uptrend movement, and that's how the market moved. So right on 4 hours time frame. So let me just, to make it neat. The time is fast spent. The time is fast spent. I just want us to understand this. So at this point, you can see that the market, after making this swing high, I want to make it bolder. So after making this swing high, the market came down to give us another swing high. And ever since, okay, let's mark this swing low. It is daily swing low. So from this daily swing low, you can use this. Okay. So from this daily swing low, the market moved up. Don't forget, we've already marked this high on weekly, so no need of marking it because it's very close to the weekly high. So I leave it there. It's a very strong zone. So the market rejected from this resistance back to this daily support and couldn't break it. It gave us another, it moved up, came down to retest it again, and since then the market has been ranging within this daily support and weekly resistance, and that's where we still have the market till now. So that's where we have the market till now. So this implies that on daily, after drawing my levels on weekly, on daily I could only find a very should I say very good support. Yes, this high is also very relevant because you can see that the price rejected at this high. It also rejected at this high. So you can also draw this on the daily time frame. So you can also draw this. So these are the levels I can find on my daily so far. So now we can zoom to sorry. So now we can zoom to 4 hours. So on 4 hours, if you zoom the market, let's, so that you can see better. Okay. So if you zoom, you see that the market has been playing around these zones that we marked right from weekly time frame. So the market has been playing around these zones. This is the weekly, this is the daily, and the daily support. This is a daily support, daily resistance. However, don't label it as a resistance because resistance will definitely turn to a support at some point. It was a resistance here, it was a support here, it worked as a resistance here, and here it's working as a support. Even here, it's immediately the market broke up, it came to retest it and serve as a support to push the market. So now on 4 hours time frame, what are the levels you can spot in the market? From this market, I can spot a swing high, I can spot a swing low. So you can also mark that. This will give you some kind of precision when you are making um, a decision, when you are about to trade. So I have the 4 hour zone marker there. So I can also draw the support. So this is my support on 4 hours time frame. So as you can see, this zone, I would have marked this support level, but it's also very close to this, you know, to this level. However, there's always a micro structure. Even within a structure, there's always a micro structure. But in order not to make your chart too dirty, full of lines and everything, you just have to find a comfortable way of, supporting all these levels. But trust me, it's not difficult. Just look for the swing high and swing low. And if you can't get it easily, try and use this. There was a time I was using this tool. When you come to this this thing, chart type, so you can switch between step line and candles. Sometimes when I am unable to spot my swing high and swing low easily, I use the step line to identify it. If you see that we've drawn the proper we've drawn it correctly, and here you can spot a microstructure. Here is a microstructure. So let's just rule it out. It's a microstructure. So the market has tested it, rejected it at this point, tested it again and rejected it, and now the market is back on this same level. So anything could happen. If it breaks through, then the market is coming to the next level, because market move from one zone to another zone. That's it. The market does not stay in a spot, it moves between zone. So when it breaks out of a zone, then it's moving from that zone to another zone. So that's how market works, and that's how we pick our entry in the market. So let's switch back to candle chart type. So this is applicable to all kind of markets. So this is cryptocurrency market, BTC. Let's see one or two examples on forex market. So let's use Euro USD, or let's use GBP USD as an example. I love GBP USD very well, so let's analyze it and see if we can also find these levels and break of structure, change of characters, all of this, even on forex market. Sorry, my network is okay. So this is GBP USD, Great Britain pounds US dollar, on the weekly time frame. So this is a chart. Like I said earlier, it's very good to analyze um, a whole lot of data, but however the most recent one are, to me, they are more relevant, and they are the ones that I can easily work with, so that I won't complicate things for myself. So from this level, what am I supposed to find first? Swing low and swing high to determine the trend in the market. We are still going to work on how we pick a trend and how I trade. But for now, I'm just trying to show you market structure. So if I'm not touching how I trade or how we pick entry for now, just relax, we'll get there. So there's a swing high here. As you can see, there's a swing high, and at the swing high, what do we have? We have the um, resistance. So I'm going to mark it weekly zone marker. So it is my zone for selling. So anytime the market comes to this level, I would know that no, it is a very, very important, it is an important level, and I must be ready to make a decision. So you can spot a swing low here also. However, this swing low has been broken by this push. This swing low has been broken by this push. So I'm going to mark. So okay, the time is fast spent and I don't want to take much of our time. You can see that from this zone to this level, what do we have? If you have been following me, you know I said when the market breaks the previous low, what do we have? We have a change of, we have a break of structure. So yeah, we have a break of structure, but this is on a higher time frame, so we might not really know, because it's more useful on a lower time frame, or let me say on your, let's say 4 hours, 1 hour time frame. That's when it is more effective and more useful. So let me just delete that. But here we spotted swing high, so let's spot the swing low. This is a swing low, which is the support we have in the market on weekly time frame. There's something called top down analysis. When we get there, it will be easier for you to understand why I'm starting on weekly. So, and after that, what are we at in the market? Since the push from this bottom, we had this up, down, higher high, higher low, higher high, and now the market is giving us the same low. You know, it has not broken this low before. So within this phase of the chart, you can say we are currently on in an uptrend market. That's on weekly. However, that's on weekly. So because, so all these swing high and swing low, you can also mark them out. So let me just mark the last swing high, which is this, and the previous swing low, because I'm waiting for this to, you know, complete its action for me to know if it is going to break this previous low. So you can see that immediately, the market, oh sorry, the light just went off, so I might not see my face again till the end of the video. So you can see that immediately the market got to this level. What happened? It was a support level in the past. So at this point again, it pushed the market upward. It pushed the market upward. So you can see the reason why you must mark out these swing highs and swing lows. So let's now zoom down to daily. So on daily, you can see a whole lot of data that a whole lot of things has happened. On the weekly, it was a short, you know, candle, but on when we get to candlestick or price action, you understand candle very well. You understand candlestick very well, and the data they represent. So here, what do we have here? We have some break of structures here. We have swing high and swing lows here. At this point, we have a swing high, because from this low, the market has pushed upward before coming down. So at this point, you have a what? You have a swing. You have a swing high. You can just mark it. So anytime the market come back there, it is, you know, it has a potential of being rejected on daily. So you have swing high there. Don't forget, um, if you want to mark you've been able to mark the support and resistance, and you know how to mark the break of structure, change of character. Let's mark the break of structure and change of character on on this um on this side of the chart. As you can see, from this low, the market move up, give us this correction, give us a new low, and the market pushed from this low, from this support, and broke above this level. So here we have what? A break of structure. And what does the break of structure does to us? It gives us an indication that the market will continue in its dominant trend. So when the market, you know, after breaking it, the market came down, and from this down, after, you know, don't worry, when we get there you will understand better. At this point, on a lower time frame, the market would have given you a change of character, because here it was a downtrend. It was a pullback or corrective pattern on daily. But if you zoom to something like 1 hour, you see that it is a downtrend, and there's a change of character here. So however, here it is what? A support level for us. So from this support level, the market pushed up and broke above this higher high to give us another higher high. So at this point we have another break of structure. So same thing here, we have another break of structure until the market give, after this higher high, we expected that the market should give us another higher low like we have here in order to give us higher high so that the uptrend can continue. But instead the market rolled down all the way. In fact, it couldn't even stop until it got here. Yes, the market rolled down from all the way from this top down here. So at this point the market has broken the character. The market broke the character again at this point, so you can mark. So this is where you know that, oh, the market is no longer buying, it's now what, selling, because it has changed its direction. So this is now a change of character. So I hope you understand now, and that's why we are not seeing the market buying. So until we see another change of character, you won't see the market buying. Here, what do you have here? After creating this lower low, the market gave us a lower high. And what happened from this resistance? The market pushed down again and broke this lower low and give us a what? Break of structure. Now at this break of structure, the truth is all this break of structure and change of character, they are also levels that we'll be using to pick our, like in our analysis. But before then, let me just explain how to spot them for you before we now talk about the implementation. The time is fast spent already, but I just want you to understand how to spot these levels. So there's a break of structure here. After the break of structure, what happens? The market, don't worry, don't forget that we've drawn this level before. So when the market was approaching, as a trader, you should know that this level is a what? It's a key level, and you expect something to happen. You expect a reaction. So you see that the market tested it, rejected it, and made a little bit of range before going up. So at this top, can you say that the market is now buying or selling? You can't say it is buying yet. Why? Because it's it's it has not given us a change of character. Yes, it has not given us a change of character. Now it gave us a high, low. Okay, let me just draw it out for you so that from this place, the market came like this, give us a correction, give us another swing low, impulsive push down, a correction. So we are now at the correction phase on on GBP USD. So the market is still on the correction phase until the market reject this area and now give us a new high, which is higher high. That's when you can say, oh, the market has corrected itself. That's on daily anyways. That's on daily. So when you zoom down to 4 hours, when you zoom down to 4 hours, you can see more structures in the market. You can see more structure. And as you can see, like I said earlier, when you zoom down to a lower time frame, you can see clearly what is happening in the market. Now in the market on 4 hours, what happened? Have we seen our change of character? Yes, we have. How? After this, the way the market has been traveling, there's a break of structure here. The market broke the structure, moved down, give us a lower high, and I expected a lower low, but instead of giving us a lower low, it gave us a what? Higher low. The higher low is not even our concern, but what? The higher high, because we expected. In a downtrend market, always look out for the lower high, while in an uptrend, always look out for the higher high. So it now gave us what? A higher high. So small correction, then higher high. So from this higher high, it ranged and gave us another swing low, swing high, and now the market is at this point. So now can you see that on daily time frame the market is still, it hasn't changed its character, while on 4 hours you can see that the market has already changed its character at this point, because it was at this point that the market changed its character. Instead of giving us a lower high, it gave us what? Higher high. So you have a change of character here. So at this point, as a day trader, you would know that you should be looking for a buy opportunity, and that is what has happened. And even at this point, at the end of every movement, don't forget the swing low, swing high, the support and resistance. You have your what? Your support. You have your support. And that is why on 4 hours, so this is going to be a 4-hour support. That is why on this 4-hour support, you see that when the market came back, it was the previous resistance that turned to a support here, and then so when the price came back to this area, what happened? It supported the market, pushed the market upward, and the market went up. So now currently the market is at this point between the 4 hours level and the daily level. So we have to wait for the market to interact back, to come back here, or either come back here before we know what is going to happen next. So this is how to spot your levels, the break of structure, change of character, the support and resistance on the chart. So easy. Just try and watch the video. I know it's a bit long. Watch it, and try to check your chart if you can spot these levels. Try to check your chart. By the time you start trading with it, you would understand better. So now I'm going to stop here. So I believe you'll be able to catch one or two things. So by the time we start trading together, so you see how we use these levels properly and interchangeably to run our analysis accurately. No matter the kind of strategy you are using, you definitely need these levels. So thank you guys. Like the video, put a comment there. Let me know what you want me to explain better. Let me know what you are not getting right, or whatever you want me to explain next. Let me know in the comment section, and please subscribe and invite more people to watch the video. Thank you guys. So I'll see you in the next video. For now, bye.